Hi everyone, my name's Michelle and I'm going to show you how to do a three-way reconciliation. Basically, a three-way reconciliation is something you would do for a trust or an escrow account to make sure your matter or client trust balances, which some people call them retainer balances, match your bank statement and your general ledger records. In other words, you want to reconcile to make sure it matches and or find any differences. So I set up this sample company, and in this sample company I have an operating account for my regular day-to-day expenses and income, and then I also have an IOLTA trust account for my retainers. And then I set up this client retainers account as a liability account because technically this is a liability account because it's services you owe to someone else. And then each individual client has its own account as a sub account of the client retainers account. And to reconcile, I usually have a spreadsheet. This is one of my formats. I have a couple different formats, but I figured I would use a simplified version. Basically, I just listed all of the clients and their balance. I factored in any unclear deposits, outstanding checks, and then I also have my bank statement balance down here. So I'm going to walk through this whole process, but first I'm going to show you where I got this information. So for the client balances, I just went to my balance sheet, and I'm going to make sure the ending date is my statement balance date, which would usually be the last day of the previous month. And then down here you can see I've got my client retainer accounts and it lists all of the balances. So I just type these into a spreadsheet. If you have a lot of names, you could export this to Excel and copy paste. That would probably be the easiest thing to do. And then to get unclear deposits and outstanding checks as of that last statement date, I would just go to my last reconciliation report. So I would go to accounting, reconcile, and then over here on the right you see a history by account tab, and then I would just find the trust account, and here's the 228 reconciliation, and I would just view the report. And if I scroll down here, you can see unclear checks and payments. There's just one check outstanding, and there's one unclear deposit that was made at the very end of the month. It was probably a credit card, and those sometimes take a couple days to process and get deposited. So I'm going to go back to my spreadsheet and show you my formula. So basically what I want to do is match what was on the bank statement to what's in my internal records or QuickBooks records. So I plugged in my bank statement number here, and for my internal records I basically took my client matter balances and then I subtracted out any unclear deposits because I'm trying to get my reconciled balance to a point that it matches the bank statement balance. So I'm taking out anything that did not show up on the bank statement. So I want to take out that deposit that I have in my internal records, but it wasn't on the bank statement. And then I also want to add back the check that I wrote that was in my records, but it wasn't on the bank statement. It wasn't subtracted on the bank statement. So I'm adding it back to my number. So here's my formula. I've got total matter balances minus unclear deposits plus outstanding checks. So it kind of goes backwards. And I know that can be a tough concept for people. You could do this a different way if you really struggle with this, but If you just use my template, it should work. And you can see that I also have this formula down at the bottom for the difference between the reconciled balance and the bank statement balance. And there's a difference of $1,200. So I have to figure out why I'm off by $1,200. There's some mistakes somewhere. So I'm just going to show you a couple tricks that I use to find mistakes. The first thing I do is just go to my profit and loss statement, and I would just go back to probably the last time I did a bank or a three-way reconciliation. So if I haven't done a three-way reconciliation in a year, I'd want to go back a year. But in this case, I'm just going back to January 1 to the end of February. Okay, and then I'm just going to click on my net income. And basically what I'm looking for here is any profit and loss transactions that are coming out of the trust account. These should all be operating account or credit card transactions. You should not have any trust account transactions on your profit and loss statement. If you do, that's a red flag that it's something you need to look into. In this case, everything looks okay. It's all operating account, so there's no mistakes there, so I can move on. So I'm going to go to my chart of accounts. Okay, and then now I'm going to look at these individual client retainer accounts, and I'm just going to make sure that there are no operating account transactions in these. These should all have trust account transactions only. If you see something from the operating account, that's a red flag. So I'm just basically going to start at the first one, and if you have a lot of names, this might take a little while, but it is actually the best way I have found to thoroughly go through these accounts and make sure everything looks okay. Okay, so Jim Abbott's okay. There's just one transaction and it's the trust account. So I go to the next one, and right away I see I have something wrong. I have an operating account transaction in this trust client balance. So I'm going to edit it so I can look at the full transaction. So it looks like it was a check written from the operating account, but instead of having an expense here, they use the client retainer account. So I would need to look into this and basically figure out what happened. Was it supposed to come from the trust account? Was it supposed to be some other type of expense that wasn't related to the client? What happened? So I would go find out about that. And let's just say I found out that they mistakenly wrote the check from operating, but it was supposed to come from trust. So let me come back out of this. So I'm going to fix that, but at this point, I'm just trying to get my balance down to zero, get my difference down to zero. So for the purposes of this reconciliation, I'm going to put the true balance of this client in this spreadsheet. So if you think about it, that expense came from the operating account, so it did not affect their trust balance. They technically still have $10,000 as a trust balance in the trust account. And then later I'll need to go back and fix this $2,000 transaction. But for now, I'm just going to change this spreadsheet to say $10,000 because that's their true balance. And I'm just going to make a note here so that I know to come back and fix that after I'm done. And more than likely what's going to happen is a transfer is going to need to be made. So I'm just going to make another note here, money to be transferred. We're going to need it to come from trust to go back to operating to make up for that expense that was paid out of operating. Okay, so I've got that one. I'm just going to keep going. I'm going to move on, go to the next one. That one looks okay. Everything came out of trust. That one looks okay. That one looks okay. And I'm just going to keep going. Oh, here's another one. This deposit says operating account, so I'm going to look at it. So it looks like $800 was deposited for this client, but it went to the operating account instead of trust. So I need to go find out if this money was supposed to go to trust or if it was supposed to go to operating. If it was supposed to go to operating, then I would need to change this to legal fee income or whatever account is used for income. But let's say I go ask about this and I find out that it was supposed to go to trust, but someone made a mistake and put it in the wrong bank account. So again, right now I'm just trying to fix or just trying to get to my zero. So here on this spreadsheet, I'm going to change this to zero because she technically doesn't have money in the trust account designated for her. And I'm just going to make a note, $800 deposit. And then I'm going to make a note because I know that the $800 went to the wrong place, so it needs to be transferred over to trust. So I say money to be transferred from operating to trust. And then of course when that happens, I'm going to need to make any entries to fix it and make it correct. Okay, so I'm just going to move on to the next one. Okay, so I'm done. I've looked through all the accounts, and when I look at my spreadsheet down here at the bottom, now the difference is zero. So I found all my mistakes and now it's done. So all I need to do is go back and fix these two transactions and do the transfers accordingly. So like I said, this was a really simplified version. If you have a lot more transactions, if you're looking at a longer time period, this is going to take a lot longer. So it's just a long process. So I recommend doing this on a month-to-month basis or a quarterly basis so that you don't lose track of what has happened. It's easier to find mistakes if you're just looking over a 1 or 2 or 3 month period as opposed to going back a year or two.